What's going on, everybody? Michael Silva here. The final countdown. You know what? Here's my guess of where the market's going. It's going to be going like this for 14 years, just sideways within this 4,200 to 4,100. We're going to talk about more specific, some key levels to watch in today's stock market brief show. I'm out here on vacation, my wonderful view, drinking my coffee this morning. Also, to note, kind of a cool update, I'm in the United States Investing Championship, so you can go to their website and see it. I'm ranked here currently at 14th place, up 26.9%. That's for the quarter. I update my stuff every quarter, but I may update it here on a month-to-month basis. We will see. Now, I want to first talk about today's Dallas Fed Manufacturing Index. I'm not going to get too much into the numbers specifically, albeit they did contract further, but this is why it's so important to obviously write down the times on your charts and be aware of it if you are trading intraday. You can see here when the Dallas Fed came out, it wasn't too far after, a few minutes before, and that's where we started to see some monster volatility there to the downside in the market. So if you want to screenshot this, and this is going to allow you, or go to tradingeconomics.com, right? I forget, I'm in a different time zone than a lot of people, and you could put in your time zone to see when these reports come out. Now, coming out tomorrow, we have some Case-Shiller homes year over year, month over month information coming out. We have CB consumer confidence, new home sales. So a couple of things. Now, these are all rated 2-star ratings. They're not major reports, but neither was technically the Dallas Fed, and that still had a big impact in the market. Now, we do have communications starting to report here. We have Verizon before the open. We got GM, McDonald's, Halliburton. I didn't have the time to pull all these expected moves, but just be aware that also after the close, we have some big names such as Microsoft, Alphabet, Google, and so forth, which is going to obviously cause more volatility in the overall markets. Now, like we've stated previously, despite all the earnings that we've seen, all the macro data drops, we continue to be wound up between 4,200 and 4,100. So, don't assume you know what's going to be taking place next. As it stands, right, the market looks like it could be just consolidating sideways and getting ready for a higher move, but it's also potentially could break very easily to the downside, as we've been seeing many indicators kind of tell us that, hey, it's a time to lay off the brakes a little bit here, or take your foot off the gas, or whatever the saying is. Now, I want to go ahead and continue on and show a couple indicators. You can see here back month versus front month. This is marked tops in the market prior, so it could be telling us that we're near a top. It doesn't necessarily mean that the market can't go back up and try to touch 4,200, but just be aware that, hey, it doesn't hold these levels for all too long before settling back down. So that's something to pay attention to. We still have a very deeply inverted yield curve, both from a 10-year, 2-year perspective at minus 60 basis points, and the 10-year, 3-month is 168 basis points as it got deeper inverted just today. Very interestingly enough, the dollar came off today, but the S&P 500 didn't really rally too much on that. So if this is just a subtle blip to higher, that might bring this S&P 500 down. However, if it starts continuing to break down further, that actually may help elevate things such as gold miners, and potentially even the S&P 500 to go trying to retest that magnetic level up here at around 4,200. All right, we'll continue on. The Saylor to Schiff tool did trigger technical sell signal. So we'll see here if, it just reverses in the next week and we go back to a buy signal, or if it's just giving us some information that it will continue to sell off. The last time I showed the Bitcoin chart, we talked about this rising wedge structure with a negative divergence. And we said, it doesn't mean that it's going to crash, but potentially if it breaks down, look for a pullback to around that. We said the 50-day moving average, or 25,000. And the 50-day moving average you can see is starting to slope up here. And the price pulled right back into that area. So if it breaks down further, we'll continue to monitor that and watch to see what takes place. But just be aware, we have that sell signal, we had a rising wedge breakdown, and we have obviously a lot of earnings right around the corner that could have vast effects on multiple different markets. The copper to gold, copper up here, S&P 500 down here. This is one of the divergences we were watching play out as the S&P 500 went further up. You can see copper just was kind of matching highs right over here, and it continues to really just press down to the downside. So some big selling in copper, but the S&P 500 hasn't really taken notice of this yet. So this could be an early indication that the S&P 500 may back off, which we've seen in the past take place. If we take a look at the summation index, this is starting to curl over itself, still on a technical, trend up, right above zero. We have the parabolic bar below the summation index, but we're taking notice that it's starting to curl, just like we took notice over here before this move higher. If we take a look at the NASDAQ summation index, this one is starting to really flatten out here, and you have the NASDAQ McClellan oscillator below zero. So this does look like, unless if we get a big day, in the next tomorrow, or potentially even earnings, like if Google reports and the market sees it is really good and it really starts lifting up and we get another tech stocks to follow suit, that could very well bring this right back up. But as it stands now, it's starting to flatten out, neutralize, and it's under zero on top of that. You can also look at the advanced decline line, just taking a look at a couple of breadth indicators, 21 and 50. You have a high, lower high, where price action had a high and a higher high. So it just shows us that there's very few stocks lifting up the market, right? But we have the internals showing weakness, which has been something that we've been kind of harping on. If we take a look at the SPY on the daily time frame, we've kind of just pointed out it's just in a subtle consolidation. As it stands, really, to be honest, it doesn't look like a bad chart, right, from a bullish perspective, right? We have a high here, and then it's just kind of flagging out right now, and it's above a 20, above a 50, above a 200 day. We do have that MACD starting to curl over. So if you just start to see the break below 410, that might open the door to retest the 50-day. But if we start breaking back above this high and start moving up higher, they can go try to retest and re-break out this around this 415 level, slightly above that. Now, when we take a look at the 15-minute time frame, I'm going to show you the daily expected move. It's 414.92 to the upside, 410.34 to the downside. This is important to note because if you were paying attention to the cues, take a look. It hit its daily expected move that we discussed on the prior episode. It bounced right from that level and started moving up. I'll show you the updated one momentarily, but let's get into the SP500, the SPY, the spider on the 15-minute time frame. So overall, pretty much unched on the day. And you can still see, right, price action is kind of just coiling, going sideways, very neutral. Now, if we measure the anchored VWAP from the high of the month and the low of the month, where are we? Well, we're still pinched between those two levels. You can see we're right below that 5-day moving average there too as well. So if we start breaking out from this little downtrend or this little level of resistance, I think that opens the door for a clear shot to that upper daily expected move, 414.92. So that is one of the levels that I'd be paying attention to. And then if we do get up there, it kind of comes into this prior area of supply. And if we get up there, right, it's a quick shot or whatever the case is, look for consolidation, and potentially then we can set ourselves up for a higher move. Now, if we start breaking down, you can see today, right, today, where do we tag? We tagged the month-to-date month-to-date anchored VWAP, and it held what as a level of support. So it pulled back into this area after the Dallas Fed manufacturing, right, a big hit. So if you're paying attention to that, look at the average buyer, right, based off of the anchored VWAP, you can see started pressing it higher. So this is obviously a clear level to watch. If we start breaking from these levels, that would be obviously a very negative sign. As you can see, buyers are protecting that. So if buyers give up, it means sellers take advantage or take control at that given time. Now, if we take a look at the Dow Jones Industrial Average, this one also looks pretty good, right? But just bull flag going sideways. It looks like if we start moving higher, it goes to retest the high and potentially even break higher to these prior swing highs over here. Okay, around 34,400. So it's another thing to pay attention to. Now, it's been on a monster run, so it might need more time to consolidate or retest the 20-day. It's a pretty steep incline over here. So just be aware of where price came from in that short period of time. If we take a look at the Qs, still in that complete chop box, but it is still holding some key moving averages, albeit the MACD is a negative divergence. And also, it's starting to spread out on that bearish crossover. So just be aware of that. When we zoom into that 15-minute time frame, we talked today, obviously, about it tagging the lower daily expected move. Now, if we look at the updated chart, 318.77 to the upside, 313.13 to the downside, and pay attention to how it's below all those key averages and anchored VWAPs, right? From the high anchored VWAP, the low anchored VWAP, from the high and low of the month-to-date anchored VWAP, and the 5-day moving average, all coming into confluence here. And see what happened today, right? Price, it opened up and it came up to retest that upper anchored VWAP, and then also the 5-day moving average. It pushed back down. It found some support at the lower daily expected move, and it started moving higher. But as you can see, even on this move higher, it's still below all those key averages. So as far as tech goes, just be aware of what's taking place. That's all I got for you on today's episode, everybody. Have a wonderful day. Hey, what's up? Have family walking in as soon as I finish. All right, see you later.